estate and kind of how the real estate market is impacted by what's going on. And so first and foremost, anytime you have a conflict like this, it causes fear. It causes fear, but it also causes massive volatility. You'll see the real estate market get some impact from it because, people buying their home. And when I say people buying their home, I don't mean the investors or, naturally people buying commercial real estate aren't as impacted, but I mean people, regular people buying their house, their first time home or their second home, selling their home, buying their home. The first thing that impacts in something like this is the fear that kicks in from a war that's going on. The volatility in the financial markets and that up and down causes people to look at the money that they have invested, the money in their 401k, their IRA, the money they have in stocks, and they see it, declining. Okay. They see the downward portion of that swinging downward, and it causes them to step back and be fearful and oftentimes maybe continue sitting on the sidelines or cancel the deal, or in some rare circumstances, it causes them not to have enough reserves to be able to close or to be able to have the down payment because there's enough of a decline in their asset situation that causes problems. So anytime there is something that causes fear or volatility, it does have an impact on real estate, specifically for those buyers that are buying their own home to live in. What we've experienced in the first year of the Trump administration, much more so than the first 4 years, is a massive amount of volatility. You've had the tariff escalation, the Iran war. We've had multiple trade things that have caused, upswings and downswings in the market. There's been stuff about AI that's caused some obstacles. All of those things slow the real estate market because buying a home is very emotional for most people. So when they see this and experience this, their emotion kicks in and their fear kicks in. And one thing I've learned through all the years in this business is that the majority of home buyers are more driven by fear than they are excitement. So they're looking for a reason to walk away. It's the same thing that happens in the transaction itself. You're seeing right now record high cancellations of contract. And part of the reason for that is because, again, the housing market hasn't really recovered. We haven't seen a boom in real estate yet. We've had higher interest rates. And then, of course, you sprinkle on a little war on there, and it's got people a little bit concerned. So if they see something in their inspection report, they're already a little bit more afraid, and they run to safety, which is, back to their apartment or back to their mom's house or back to the house they're living in now that's cheaper, not the one they really want to be in. So whenever you have these situations and these escalations and conflicts and, trade disputes, all these things that drive down the stock market, it does impact real estate, and it causes that fear to kind of lead buyers. Now, what I want to talk about next, though, in that same token, you have the fear that kicks in from, the consumers. They're afraid. They don't want to act. They want to wait for this to get cleared up. But it's also pressing down on them financially because you're seeing gas prices rise, their expenses rise. Potentially, if this carries on for a while, we get back into an increasing inflation environment. And then you start to have problems with affordability even more so. Interest rates have been down at their 2 or 3 year low or 4 year low even, which is improving affordability. But if people's everyday costs start increasing because gas gets more expensive and, energy gets more expensive, that also has a negative impact. So in addition to emotional, there's the financial side of what happens when we have this conflict. But it's one of the beautiful parts about real estate that why I always encourage people to do what they can to push through that. We know most of these conflicts are short-lived in terms of their fear and desperation, the selling off of the market, the declining of assets, the stocks that drop 2 or 3% or sometimes even more depending on how volatile it is in a day. Real estate doesn't do that. That's one of the nicest, most beautiful benefits of real estate is that if you buy real estate, it is such a slow-moving market that these upswings and downswings don't cause your house to drop 2 to 5% in a day like can happen in the stock market or crypto, for example. So real estate is such a great hedge against what may be going on in the rest of your financial life with that volatility because it's not going to experience the swings up and down in price. It just doesn't move like that. It's so slow-moving. You're talking longer closings. It just takes so long for things to trickle into and impact real estate. So just from a flight to safety perspective, you see real estate investors an investment pick up some during these situations because maybe there's allocating or reallocating their assets from the public markets and saying, okay, I'm not loving what's happening in the stock market right now. I'm not loving this volatility. Where can I put my money where there's still probably a pretty good gain in there, but I don't have these huge swings where it's up and it's down, and every time the president, posts something on X that, the market drops 2%, or every time he goes on a speech and says that the war isn't really over yet, or it's going to be a few more weeks, and then the market gets crushed, your home value doesn't get impacted by that. So a lot of people acting and pulling away from real estate, they actually should be doing quite the opposite, because it doesn't have the same effect that people think that it does. People think, oh, I don't want to buy a house now because the stock market's getting wrecked. That's actually the reason you should be buying a house or investing in real estate. You should be reallocating assets potentially if you're too heavy in the stock market in a period of volatility. And let's face it, the next few years under President Trump, they're going to continue to be volatile. There's just no question about it. He is a president of action, good or bad. I think mostly good, some bad. He's a president of action. So you're going to see this volatility, and it's going to cause, the fear to kick in for people. So if you're an experienced investor or someone who just simply wants to move money out of the market because they're tired of that volatility, now is a great time to look at real estate. We've been in this period of time for the last few years where we've seen a little bit of appreciation. We're starting to see some appreciation again, not a ton. Sales are down and rates have gotten better. So it is building up. It's, there's a pent up kind of buildup that's happening with real estate. And I think this war in Iran is kind of holding it back a little bit more than it would have been had it not happened. Had it not happened, I think we could potentially see some more interest rate relief. I think inflation was heading in the right direction. We've got a new Fed chair coming in. I think that people were excited about housing. I think specifically in Tampa Bay, we're another year away from, the bad hurricanes that we got. I feel like everything was heading in a really positive direction for real estate, but this is kind of that cloud that's hanging over the real estate market. It's going to cause some obstacles, but it is not based in fact or historical precedent that people should run away from real estate right now. In fact, it's quite the opposite. It is a safe haven compared to the volatility of the stock market. So we know that President Trump has an agenda to juice the housing market. He has said it. He's made it clear that he wants a better real estate market. He wants to protect people's assets and protect their home values and create more home sales. We know he's very much involved with attempting to have some impact on interest rates as well as on housing policy. I think some of that is a little bit tabled right now. I think some of those things would have been in motion already, but can't really get rolling until conflict in Iran gets resolved. So like I mentioned, it's a psychological, emotional challenge to the real estate market, but it is a financial one too, because if it continues and gas prices rise, that does start to hurt people. It limits their debt to income ratio. Now they're incurring more expenses. Their money is going towards things that are more expensive than they were when they first looked at buying. And unfortunately, even interest rates have this volatility. So what I can tell you as a home buyer is take a step back and really think about why you're buying. And does the thesis of why you're buying, especially if you're buying for the long term, change because of the situation in Iran? Does the reason you're buying change? Most of the time that answer is no. And in fact, I think it is a wonderful safe haven that can provide people more stability in their financial world. If you needed to take money out of the market, obviously maybe not on a really bad day, but if you needed to take money out of the market to put it into real estate, psychologically, I think you're going to see less of that. You're going to feel less of that up and down. And there are people that go through these volatile periods and they say, you know what, this is now a time for me to think about maybe buying some investment real estate because I'm tired of these fluctuations, these wild swings up and down. And I can tell you the wild swings up and down, they're going to continue. I mean, they just are. There's just no way around it. It's going to keep going in that direction. It's going to keep being volatile. I don't know how quickly Iran is going to get resolved. It's going to cause gas prices to rise. I don't know for how long. But again, the point is that if you're making a choice about buying or selling your home because of a war thousands of miles away, that realistically that asset has a very safe kind of protected bubble over it that some of the other markets don't have. It's more of a safe haven long term. So I also saw something recently because people get a little bit fear mongered to death about real estate, especially anyone that grew up during the Great Recession. They say, "Oh, foreclosures are rising. Foreclosures are going to take over the war and the loss of labor and all these things." We had such a run up in prices, and there have been so many cash sales. The majority of sales, people are in strong equity positions. The number of foreclosures right now is one tenth what it was at peak. So we're not in some situation where we're dealing with a market crash, and Iran is certainly not going to crash our real estate market. So I am still very optimistic about what's coming with the Tampa real estate market. We've just got some things to get through. I think the second half of this year, we get through the conflict with Iran, so the kind of the emotional hangover goes away and inflation kind of gets reeled in. We see some rate cuts this year. We get through another safe hurricane season. I think later this year and then in 27, we're going to see some really, really healthy price appreciation and a much more balanced real estate market. That's my prediction. That's what I'm sticking to. So if you're a buyer or a seller right now and you're running away because of the conflict with Iran and the constant messaging of the mass media keeping you afraid, which is what it's supposed to do, so you keep watching and keep hearing the ads and advertisers keep paying, I would tell you to take a deep breath, take a step back, and evaluate whether or not the thesis for you buying or selling still makes sense, and it probably still does.